So any small amount helps. It's not, you have to have like hundreds of thousands of dollars just sitting under your mattress and then you can invest it into something and make a big difference. It doesn't always work like that. What's up, guys? It's Sunday, March 17th at 2 in the afternoon. I know I haven't really posted anything in a while. For that, I apologize. I have to get better at documenting the financial stuff that I'm doing, which is why I just started this one. I actually just sat down today. It's a Sunday, the markets aren't open, but I was just sitting here watching Netflix, pulled up my laptop, and I just wanted to go through and check some ETFs that I've been buying. And I was like, you know what, I should pull the camera out and actually talk about this while I'm going through it. I'm just gonna deal with this glare. This is outside, by the way. Here, hold on, let me just, condos. It's actually really nice. So all the ice is melted. Hopefully winter's over. Don't really quite know. It's still kind of chilly. I'm really looking forward to riding my bike and stuff again. Yeah, I mean, I see a lot of runners and stuff kind of going along the boardwalk over that bridge. So hopefully winter is almost over. All right. So the point of this video is not really to get into why I'm buying this stock or why am I buying at this price or anything like that. It's just to kind of show you guys the technical part of going through this. So I'm going to be talking about the current stock price or the ETF price. I have a certain amount of dollars in my account extra that I want to use to buy these stocks right now. It's a super small amount. That's why I'm showing you guys, and how to kind of figure out and place that actual order. All right, so this is kind of a quick overview of the software that I'm using. It's called Questrade IQ Edge. It's from Questrade, which is an online brokerage, which is the one that I use, but you can really use anything that you want, or you can even go with a bank. Again, so this is kind of like super technical looking. I just use it because it shows a lot of the information that I need to make a decision. On the bottom here, you can see that there's a chart. This chart actually covers 5 years worth of data. The one on the top covers 6 months. They're connected, so although this covers 5 years worth of data, kind of at the end here, this little section at the end is actually this entire upper chart, if that makes sense. Kind of, you can think of this as like a zoomed in version of that little bit there at the end. If I take this upper chart and I zoom it all the way out, it kind of looks the same as the bottom one. So really I'm just focused on the last 6 months, and there's some quick drop down things here to help you out if you want to quickly go to a specific date range or whatever. Now let's talk about the colors for a second here. So red and green. So red means that the market went up that day, and green means that the market went down that day. It just means that the market closed at a price higher than it did the day before. Or in terms of the market, I mean like the stock. You can kind of see that there's a lot of fluctuation here. There's a lot of red and green. But overall, in this bottom chart here, you can see that the overall trend over the last 5 years is that this BMO aggregate bond index has been going down. So it was highest kind of back here in 2015, and it's been going down kind of irregularly since then. Except for within maybe the last year or so, and that's why I've been starting to make a couple purchases. Down here at the bottom, there's a couple green arrows. You can kind of see that I've made a couple purchases recently. Those are the same if I go up here. They correspond to these two up here. So again, if you zoomed into this little bit here, it represents this whole part here. So you can see that I made 2 purchases around here at the end of January and right at the beginning of February. And since then, the price has gone up, which is great. That means I made money in the short term. But if you remember, short-term stuff doesn't really matter to me. It's more like the long term. So although it's gone up in the short term, that's great. I'm not going to sell it for a long time anyway. So there could be a lot of fluctuations between now when I bought it and when I sell it. So the price change in the short term doesn't really matter to me. I just want to show you guys one thing here. The reason why I like the software as well is that if you go up to up here on the left-hand side, you can kind of put ticker symbols that you want to follow or that you're probably going to be most interested in buying and selling or trading. And if you click on them, it updates everything. So everything here is linked together. So here's one ETF, this is a different ETF, and this is a third ETF that I have in this list. All charts and all tables here are linked together. It just makes it really easy to flip in between, to check things. And I'm pretty sure if you adjust a chart, for example, if I go back to, I don't know, maybe that's like the last year or so, and I go to another chart, it keeps the default zoom. So you can kind of come in here and poke around But when you kind of go back to resetting this, or you log out, log back in, it's set again to your default settings. So it's always set up the way that you prefer, and you can choose all those kind of things. So let's go ahead and actually buy something, because that's the point of this video. So I'm going to be buying a little bit of this BMO Aggregate Bond Index ETF. It's something that trades on the TSX in Toronto, and I'm just picking up some more of these units because I have a very small amount of money left over in this account, and I just want to spend it on this to hold some of these bonds, because I think the value of these bonds are going to go up in the coming years. So there's really a few different things here to focus on when you buy a stock or an ETF in the market. So right now we're going to be focusing on this left kind of corner window here. This is what you're currently selected on. So you can see that the ticker symbol is ZAG. It gives you the name there, BMO Aggregate Bond Index, some information like opening price, closing price. Now today is Sunday, and the markets are not open today. So if you're watching this and you're thinking like, why is Ben buying stuff on a Sunday when the market price isn't even going to be accurate because the market's not open? While the market's closed, the price can kind of go up and down, and I don't actually know what the price is. I should probably be buying this during the hours that the markets are open. My dog is passed out here on the sofa, but there's different types of orders that you can do. You can buy something right now and buy it at the market price, which is a fair market price that's determined by your broker and or your bank. Or you can buy other things, like you can buy with a limit order. So I can buy at a certain price and say, you know what, I'm gonna probably only buy like 2 units of this thing right now because that's all the money that's in my account. I'm gonna buy 2 units at this very specific price and just keep that order open until the stock hits that price. When the stock hits that price, fulfill my order, please and thank you. So I can set this price right now. I'm sitting here on the sofa watching Netflix, like figuring this out, what price I want to buy it at, how many units, all that kind of stuff. And tomorrow or the next day or whenever the stock hits that exact price that I specified, then my order actually gets triggered and the brokerage will buy that ETF. Right now we're going to go through the process of like setting those instructions up. So right now there's a few things you need to know to buy a stock. One is, what is the current price, or what is the price that you want to buy this thing at? So if I go down here, if I just hit this little button down here called Snap Quotes, or if I go look at the last price on this thing, it looks to be $15.66. If I come down here to the bottom, there you go, you can kind of see that there, $15.65, round up to 66 cents. So that's the cost of 1 unit of this ETF. So I'm really just gonna buy 2 units of this ETF. So in terms of quantity, I'm gonna put in 2. In terms of order, these are all the different types of orders that you can make. So kind of like I was saying before, there's market, limit, and a whole bunch of other ones. So right now we're gonna do limit, and here I need to specify what the actual limit amount is that I want it to buy at. Duration, how long should this order apply for? If I hit day, it'll just be valid for today. If I hit good till close, then it'll be good until this order actually gets initiated. So that's what I want to do. I want to do good till close. And in terms of limit price, I want to either set something around this number, so $15.66. If I want to buy it right at $15.66 when the market opens on Monday, I can do that. I can type in $15.66. And when the market opens, and if that's the price, it'll fill in that amount. I can really set anything I want here. I could put this as, let's say, like $15 even. And if I come over here to the chart, you can kind of see that the lowest value here in most recent years has been $14.95. So it has hit $15 even at one point, kind of like back here. Between November and March, it has not been $15 in a while. It's been kind of going up, climbing up here. And like I was saying earlier, but right now it's at $15.66. Because I'm going to buy things for the long term and I don't really care about a few cents here, I can just put in $15.66. So when the market's open, if the price is higher than that, this order will not fulfill on my behalf because I'm limiting the price at $15.66. I'm basically saying I don't want to pay more than $15.66 to buy this ETF. The price has to be that or less before I buy it. So I can go ahead and place that order. I can choose which account I'm buying this in. This is all preset for me right now. I can just hit buy. So I place the order and you get this little indication here. It says you have +2 limit order at $15.66, and going across here, that's the price. So as soon as it hits that price when the market opens, it'll fulfill the order, and I'll be the proud owner of 2 new units of this ETF. So just to explain a little bit more how this works, if you had, let's say you had $5,000 in an investing account and you wanted to spend all of it on an individual stock, and the stock price was currently $15.66, you could buy 319 units, 319.28, but you can't really buy 0.28 of a unit, so you just kind of round down to 319 units. What that would look like is 319 units at $15.66. You'd be spending $4,995. So that's a little bit less than your $5,000 that you wanted to invest, but that's because you couldn't buy a whole nother separate unit. That's kind of how you would you go between the three numbers. You have your price, in this case $15.66, the total amount that you have to invest, which is in this case $4,995, and you can buy 319 units. And just as a side note, 319 units, that's important because you're basically telling your broker, I want to buy this amount at this price. Those are kind of the two numbers that they really care about. $4,995, that's up to you. You have to make sure that you have this amount in your account. If you don't have this balance in your account and you try to make this purchase of 319 units at $15.66, you'll get a warning saying like, hey, you don't have enough balance to cover this transaction. Do you want to deposit more funds? Do you want to sell something so that you can generate this much of a balance in your account to kind of successfully fund that kind of a trade? So these are kind of the three numbers that you would need to know. The units that you're buying, the price at which you're buying the units, and then from there you can kind of calculate how much money you need to make that transaction happen. And since we're talking about units, let's say 319 units, I just want to talk about one last thing, which is, let's say you had 319 units. If that was the number, that was the amount of units that you can purchase of a stock, that number is important in case the stock has dividends. So a dividend is when you buy a stock, they use the excess money that the company makes to pay its shareholders, which would be you if you bought some shares in that company. Let's say you bought 319 shares and the dividend paid 10 cents per share. You could then calculate how much money they would be paying you every frequency that they would pay the dividend, which is sometimes a quarter, sometimes it's monthly, sometimes it's every 6 months, sometimes it's once a year. So let's say you bought 319 shares of a company or 319 units of a stock, and it paid 10 cents per share. You could do times 0.10. So for your 319 shares, you'd be getting 10 cents for each one of those, which equates to $31.90 per month. So if you want to know what that's like per year, times 12, and you'd basically be getting $382.80 per year to own that stock. So that's another approach that people take. You can buy a stock specifically for the dividends. And so at the end of this first year, you would receive either in your investing account, or you could do something called a DRIP, which is a dividend reinvestment. And it basically takes this $382.80 that you were given for owning that stock, and it would buy $382.80 worth of more stock. You can kind of see how that fuels your investments on its own. It kind of grows the investment every year as you're getting paid more dividends. The dividends buy you more investments, even if you don't put in any more money, and that in turn buys you more units or more shares, which in turn gives you more dividends. So every year it's kind of growing and growing and growing. So let me know if you have any questions about that. Part of the reason why I just wanted to quickly document all that and show you guys buying a super small amount of any kind of stock is that I hear so often one of the excuses why people don't start investing is just because they don't have a lot of spare money set aside. And I don't believe that. Like, I think that if any amount of money that you have set aside, apart from if you've got all your bases covered, like if you don't need that money to survive, if your life is already, like you've got your rent covered, your groceries, you have a job of some kind, so you have some kind of money coming in, and you have some kind of emergency fund set aside, beyond that, any amount of money that you have, you can start investing, whether that's in the stock market, a public market, a business, starting your own business, or investing in somebody else's business. If you have money, even if it's a small amount, like you just saw me buy like $30 worth of a bond ETF. That's such a small amount, but it really adds up. So like this is a real documentation of what I'm doing. Like I had $30 in that account that was just sitting there. It wasn't making me any money. In fact, it was costing me money because it was just sitting there and it was losing money. Sitting somewhere in an account like loses its earning potential. Money should be working for you. You should be spending money all the time. People take that as you should be spending money on things that cost you money. That's not true. You can be spending money on stuff that makes you money, and that's the whole idea. So money sitting somewhere is actually losing its value because of inflation and whatever. It's not making you money, so it's actually costing you money, because all money has the potential to be making you money, and if it's not, then you're missing out on that. So you're actually losing a little bit of money. So you just saw there, I bought $30 worth of an ETF. That's just like a very small amount that I would usually buy. As soon as I'm done editing this video, I'm gonna go in and actually make a much larger purchase, but every small amount counts. So that's all I had in that account, bought it, great. 2 weeks from now, when I get paid, there's gonna be more money, put more of that in there, etc. So any small amount helps. It's not, I feel like people are so caught up in this idea that you have to have like hundreds of thousands of dollars just sitting under your mattress and then you can invest it into something and make a big difference. It doesn't always work like that. Like you can have small amounts, but as long as you're putting it to work and you save up another small amount, you put that to work, etc., it actually really helps. So don't sit on the sidelines waiting for this huge windfall or inheritance or win the lottery. It doesn't usually work out like that. It's usually the small amounts that you kind of set aside and you save and invest and you put strategically for growth. That's kind of where it really pays off. So just think about that. Just want to put that as a quick note at the end of this video. If this was helpful, if you enjoyed seeing this or anything like that, and you want to see more of this kind of stuff, let me know. Click the little like button. If you want to see more videos, subscribe. Just stay tuned. I'm going to show more of this stuff. And if you want to see something specific that I'm not showing yet, leave a comment. Tell me, or message me, or DM me on Instagram, or whatever. Awesome. Thanks for checking this out. Enjoy your day.